Hello, everyone. Welcome to the 18th Learn live stream session. I'm Sabrina, your host for today. It's been an exciting few months for the crypto market, especially with Trump's election win. But now we're at a bit of a crossroads. Prices have cooled off, and everyone's asking, what's next? That's what we're here to find out today. We'll be discussing what's ahead for Bitcoin, altcoins, and emerging crypto sectors. And of course, we've got an exclusive red packet giveaway lined up for both new and existing users. So buckle up. This live stream is available on both the Bybit app and Bybit web, but for the best interactive experience, as usual, do join us on Bybit web so that you can get your answers to your burning questions in real time. Sorry. We're doing 2 rounds of red packet giveaways today, one for our existing users and one for our new users. So for the first round, we're giving away 1,000 Chill Guy tokens to 200 existing users. All you need to do is trade at least 50 USDT during this live stream to stand a chance to win. For the second round, we're giving away 1,500 Chill Guy tokens to 300 new users. And all you have to do is sign up for a Bybit account and deposit at least 100 USDT during this live stream to stand a chance to win. Now, so sign up and sign up now to get ahead of the game. And while you're at it, like this video, share the stream out, and let's get started. Now let's welcome our 2 incredible panelists who will be sharing their insights with us today. First up, we are very happy to welcome Brian, Head of Content at Sentiment. Hi, Brian. It's great to have you here with us. So for those of you who don't know, Sentiment has been doing some incredible work in providing data-driven insights into the crypto market. In fact, we recently worked together on a detailed report highlighting key narratives expected to shape the market in the coming months. So we'll be diving into some of those insights during today's discussion. But before we get started, Brian, could you share a bit about your role at Sentiment and what's been keeping you busy lately?
Sure. Thanks, Sabrina. Thanks so much for having me. And I'm excited to talk markets. And I've really enjoyed writing the insights for Bybit about where the markets are currently standing. So this is the first time I'll be doing a video version of what I write about. And I've been the head of content at Sentiment for about 5 years now and have been gradually coming up with new ways to analyze markets. Our developers do an amazing job of putting together in my opinion, the top on-chain, social, and development activity metrics out there to give everyone a great idea of where markets currently stand, which altcoins might be worth taking a good hard look at. And we cover about 3,500, a little bit over 3,500 different projects now, giving various on-chain, social, and development metrics for each of them. So I encourage people to check it out at app.sentiment.net.
Awesome, Brian. For those of you who are interested in checking out our report, you can also take a look at it on learn.bybit.com. And next up, a big welcome to Shun Yet, Head of Derivatives Business and Institutional Sales at Bybit. Hey, Shun Yet, how's it going? Please give us a short introduction of yourself. Yeah.
Sure. Actually, my title seems very, very long, so I apologize for that. Hopefully it fits on the screen. I'm in charge of 2 different departments of Bybit, so I think a lot of people are familiar with derivatives, which is, our perps, our futures, and options business. It's our bread and butter of our business. It's been live since day 1 of Bybit in our 6-year journey. My other department, which might be more interesting to a lot of the viewers here, is that I'm in charge of the institutions department, which include a lot of the market makers, hedge funds. So it usually has a different tilt and sentiment on the market of what they want to do and what they want to trade. So my background is a little different. I think some people might not know. I used to be one of the biggest clients of Bybit. I used to be one of the big institutions, one of the top 3 institutions that trade on Bybit. And I, love the crypto space. I jumped ship and went from the client, and now I work at Bybit. My background is traditionally more in trading. I've been trading since I was 20 years old, and I've worked at various investment banks, hedge funds, and global market makers.
Thanks, Juliet. Thanks both of you for joining us today. We're very excited to hear the insights that you guys have about the market. For those of you who are just tuning in, I was sharing that we do have a red packet giveaway today. So we're doing 2 rounds of red packet giveaways, one for our existing users and one for our new users. So keep a lookout for the red packet on the screen. Click it to claim your reward. All right, you can check out the terms and conditions right down. Just scroll down and you can read all the rules to win your reward. Right, so let's quickly get started. So in the first segment, we're going to be talking about market sentiment and key narratives for 2025. So, we all remember the excitement after Trump's election win when Bitcoin soared past the 100K mark. But fast forward a few weeks and we're seeing a different story. Bitcoin prices have pulled back and are currently hovering around 94 to 95K. So, with Trump's inauguration just days away, the big question on everyone's mind is, will prices continue to dip, or could we be gearing up for another rally? So, let's dive into this. First up, over the past few months, we've seen large Bitcoin holders or wills accumulate aggressively. However, according to Sentiment's latest report, will activity has slowed down significantly in recent weeks. This is interesting because major players often step back during periods of uncertainty only to return when there's clear market catalyst. So with Trump's inauguration around the corner, do you think they're waiting for a signal before making their next big move? Brian, maybe you would like to go ahead first.
Yeah, so I touched on this, as you said, in the last Bybit report that we put out, and it appears, I think a lot of people are familiar with the buy the rumor, sell the news effect of, just like we saw with the ETFs almost exactly 1 year ago. Uh, Everyone was anticipating those coming out. They eventually did come out, and then the price actually tanked for 2 weeks, and everyone was scratching their head, going, "How did this happen? We thought that this was bullish. We feel scammed. We're out of here. No more crypto for me." And then after people started panicking, we see the price soar, right? So what happened here, based on everything that I've gathered from our data, is people got very excited about the news that the pro crypto candidate, Donald Trump, regardless of your take on him, especially in the US, he's very polarizing, but he was mostly perceived around the world to be the pro crypto candidate for the US, a very powerful country, no matter where in the world you were. This was a bullish event, and the world was celebrating that fact that he was elected as the 47th president to be inaugurated on January 20th, 6 days away, or 5, depending on where you are in the world right now, but 6 here in the US, which is where it matters. And uh, it appears as though the whales are kind of, at this point, sitting on their hands and saying, okay, the only thing left to happen now is for him to officially be inaugurated. This has been expected for the past 2 months since he was elected. Now we're going to wait for it to happen and make sure that it's smooth and the transition, doesn't have any crazy noise. There was an attempted assassination 6 months ago, almost exactly 6 months ago. So I'm not going to suggest something like that would happen again, but there's always a bit of uncertainty these days when it comes to presidential transitions. And the whale activity, despite slowing down, that doesn't necessarily mean prices are going to tank. It just means their activity is in a holding pattern, or a hodling pattern, pun intended, until uh, things are official 1 week from now.
And uh, while whale activity has cooled, we've seen increased participation from retail investors, many of whom entered the market during the 2017 bull run. Back then, retail speculation was a key driver of Bitcoin's rally, but things are different now with more institutional involvement. So given the current dynamics, do you think a new batch of retail traders could once again drive the next phase of this bull run, or is institutional participation still the dominant factor?
Yeah, I think as time progresses, it's becoming more and more of an institutional's playground. Not that retail's money doesn't matter, but the amount of retail investors needed to make an impact on markets these days
Mhm,
uh, is exceedingly higher than where it was in 2017 or even the 2021 bull market. And
mhm,
we've seen evidence in just how contrary prices seem to run based on what retail is trying to make prices do and how much they are acting in unison uh, in comparison to how whales are trying to make prices be driven.
mm. Okay. Shunya, did you have something to add
Yep.
on as well?
Yep. So I think on the 2 points that was mentioned earlier, I think I sort of fully agree with what Brian said. A lot of this was, you sort of buy the rumor, sell the news. And I think there's one extra tip of information I wanted to get in there was that because of the potential dynamic and change of U.S. institutional participation. I mean, right now there's a lot of institutional participation, but they're not using a U.S. entity to participate. And what we've seen is that I think there's huge pent-up demand from institutions in the U.S. To get involved with crypto, and instead of pretending going from other entities, so they're all sitting in the sidelines. And I think that is something we haven't seen before. We had so many account openings. You could look at the last 6 years of Bybit's existence, half of the institutional accounts were open last year. And everyone's just waiting to see if there's, I guess, some clarification from the administration, to move forward. So I see a massive pent-up demand. And I think Brian's other comment was also correct. Historically, it was more retail driven, and the shift is already happening. We have large hedge funds that are in the space now, and if you look, depending on the marketplace in the world, like in Asia, it's more retail driven, where the U.S. it's mostly institutional driven. And as the U.S. becomes bigger and bigger, you'll see there'll be more institutions sort of leading the prices and driving prices.
Speaking of which, we've seen corporate players like MicroStrategy continue to double down on Bitcoin. So just yesterday, it was reported that they added another 2,530 Bitcoin to their holdings, bringing their total to nearly 450K Bitcoin. So while institutional adoption is often viewed as a stabilizing factor, large purchases like this can also lead to significant volatility, especially around key events like Trump's inauguration. Do you think that corporate accumulation could create short-term price swings as these entities influence liquidity and market sentiment?
Yeah, I do. I think that short-term swings are almost, I wouldn't say exclusive to what these corporate and institutional traders are doing, but they're becoming more and more the norm. Anytime we do see a big swing, Bitcoin goes up or down $3,000 in one day in market value.
Mhm,
It has a ton to do with not just MicroStrategy's actual buys and sells, but their announcements of the buys and sells and the crowd's reaction to that. So it's kind of a twofold process. Every single time we hear about these comical amounts of Bitcoin that are being bought up by MicroStrategy, and I think that anytime we see swings now at sentiment, the first thing we do is we check for news on BlackRock or MicroStrategy or some of the largest institutions and corporations out there.
mm. Do you think these short-term price swings create opportunities for retail traders to actually go in?
Yeah, I mean, if they're bold, right? We've talked a lot about how markets typically go the opposite direction of the crowd's expectations almost
Mhm,
all the time, and that's been the case since probably 2015 or 16 when markets began to have enough liquidity for big players to have major swings in the markets. So
mm,
with the dip, right? Like within the past 24 hours, we saw Bitcoin go below 90K
mm.
for the first time in
Since
I think
November,
about
I
2
think.
months ish.
Mm,
Yeah. So when that happened, there was this big uh, spam fest of the words 90K or dump or dead, negative keywords that kind of resemble that the crowd is starting to get very fearful or show FUD, fear, uncertainty, doubt.
mhm,
And as soon as that typically happens, for the savvy traders who are waiting for the crowd to turn away from Bitcoin, that's when they're striking and buying those dips when everyone
Mhm.
else is calling it just the beginning of a dump, and we'll see you at 40K, and all of these, narratives that start to form.
Mm. Shunya, what do you think about that?
Well, this is a very interesting call because you sort of have to agree with Brian everything here. I think a lot of you talk about the liquidity. So the liquidity actually stays strong. So the funny part is that a lot of what MicroStrategy is buying isn't big. It's the news that's changing prices. So it looks like prices are moving a lot, but it's more or less on the news, but not the underlying liquidity. The underlying liquidity of the crypto market is very, very strong. It is, it's a proper asset class now. The daily trading volume are up there with like lots of traditional exchanges. So I think since it's still mostly retail driven, any very slight positive or negative news could have outsized impact, not in terms of like impact on the liquidity itself, but because of just due to price swings of the news.
Mm. Okay,
Completely
so
agree. Yeah.
yeah. All right, let's talk about altcoins for now. So Solana has seen impressive growth. Recently, it was reported that it surpassed Ethereum and Base combined in recent 24-hour DEX trading volume. So with its lower transaction fees and faster processing times, Solana is increasingly being viewed as a serious competitor to Ethereum. Do you think we could see a major shift in dominance among layer one networks in 2025, or will Ethereum's ecosystem strength help it maintain its lead? Audience, do you think Solana could overtake Ethereum? You can drop your thoughts in the chat, and we can also just share it later on. What do you think, Shugit?
Okay, once again, not financial advice, but I think Ethereum is a great chain. The problem is that I think a lot of the layers twos sort of replace some of the functionality and taking the sort of financial incentives to hold Ethereum, where for Solana, that is less of the case. And I think if you were, unless Ethereum takes that back, I think right now, at least something changes drastically, it feels like the growth potential is higher. Just the growth potential, not their overall, is higher with Solana, in my mind.
Do you agree, Brian? Once again, not financial advice, just educational purposes. Yeah.
Yeah, of course. I mean, they're both viable networks that offer so much to crypto, and they will continue to
Mhm.
do so for years and probably even decades to come. Um, I kind of view this as an opportunity to share something that we use to kind of assess different major blockchains. And if you don't mind, I can share my screen and kind of show
Sure.
how we track overall development from different major networks here. So give me one moment. Let me
Sure.
know if you can see this. How's that coming up for you?
Yep. We can see it.
Perfect. So this is, as the title at the top left says, the Ecosystem Development Activity Dashboard. And what this shows is the overall amount of GitHub activity per blockchain, plain and simple. So it's combining all of the different projects on Ethereum, BNB, Polygon, Arbitrum, Optimism, and we can go far and beyond. And if we look at the top 10, we see Ethereum here at number
Mhm.
one. Obviously, it's had a head start on Solana, being founded back in 2015, even 2014, actually, but it was first traded in 2015. It has almost 1 million activity events, whereas Solana has about 217, 218,000 or so. So call that maybe 1/4 the amount of Ethereum. That doesn't mean it's 1/4 the amount of uh, power and potential success of Ethereum. It simply means there is more overall in crypto being built under Ethereum right now compared to Solana. But you'll notice if we go back to the past 6 months here, Ethereum's actually seeing 11% less development activity, whereas Solana is seeing about 3% more. If we zoom out a little more, we go back, let's say 1 year, Ethereum's up about 2%, but Solana's up a massive 13%. So you can
Mm.
see where I'm going with this. There's definitely a trend forming where Solana does appear to be one of the pioneers in seeing a lot of exponential growth among
Mhm.
different projects, and by just sheer quantity with the amount of different projects. Solana has a bit of an advantage and seems to be playing some catch up right now. I won't comment much about superior or inferior tech, but I will say that right now there seems to be this competitive arms race that can border on toxic sometimes between the two communities. But in essence, it actually kind of brings out the best in both, and it's kind of very intriguing to watch from my perspective right now.
Yeah, because it encourages innovation from both ends, right?
Right.
Okay. Meme coins had a crazy run in 2024, but volumes have dropped off sharply since then. Do you think they've run out of steam, or could we see another revival, especially with all the hype around Trump and social-driven assets?
Yeah, I can take this one first. Meme coins typically are the last stage of most bull cycles from what we've seen. And I don't think that the 2024 run was an exception. We saw all sorts of different meme coins pop up in 2024, especially at the beginning of the year, right before the top in March, when we almost got to 75K Bitcoin, right? What happened then was the same thing we saw at the end of the year. Bitcoin led the way, and then meme coins suddenly pop up all over the place. Whether or not they have any sort of viability for a long-term future in crypto, people start to pour in their Bitcoin profits into meme coins, and then we start to see tops form, especially if meme coins have major price dominance over Bitcoin. That's one of the primary signals we look for in a top. It doesn't mean that as soon as meme coins surge, it's an automatic time to sell everything you own, but it means that crypto markets are turning into a little more of a gamble fest. And I would not say they've run out of steam as much as they've ended their temporary cycle. And now we need to kind of wait to see how the reaction is to Trump's inauguration next week, whether Bitcoin just immediately pops back up above 105K or something. If that happens, then meme coins will follow. And if you're staying in touch with which meme coins the community is starting to fall in love with again, you can find some opportunities once again. But it's all contingent on Bitcoin being able to surge once again first before meme coins.
Thanks, Brian. And just to put it out once again, this is not meant to be financial advice. Everything discussed is for educational purposes. Now, speaking of meme coins, we also saw how Elon Musk's Kekius Maximus had no change sparked a 4,800% pump in a random token. So, you mentioned that meme coins, they're sort of a gamble. Do you think that these types of events still present real opportunities, or are they, like what you said, just a gamble at this point?
Yeah, I mean, the opportunities are presented if the crowd decides they want there to be opportunities. At the end of the day, it's a short-term versus a long-term play. And in most cases, if you're hodling, you'd want to stay more on the side of Bitcoin, Ethereum, and these top blue chip assets. But if you have enough of the community decide that it's meme coin season and they have the profits to throw some money around, that's when Kekius Maximus and many of these other projects can flourish if you really have your finger on the pulse of where the community is going to go next.
All right, let's just hear from Shunyet. So if Trump moves forward with his proposed Bitcoin reserve and crypto-friendly policies, do you think it could encourage other countries to adopt similar strategies? For example, Kenya recently announced plans to legalize cryptocurrencies, aiming to regulate digital assets while managing associated risks. So could we see like a ripple effect with this?
Well, there would definitely be a ripple effect. I mean, the U.S. doesn't have the largest reserve actually, and there's actually lots of other countries that have it. So there's certain countries probably won't do it, like China. But you could get a lot of the European Central Bank. You could have a lot of the Middle Eastern players that are waiting for a concrete sign from the U.S. to do this, and it will have a huge ripple effect. And I think a lot of financial institutions that wouldn't touch it before. If you have the U.S. government doing it and you have all the top custodians in the U.S. also get involved, it's just going to happen. The only thing I think I want to mention is that we don't know when Trump is going to do this, right? We know he's crypto friendly. He's going to come in, and it's not that he's not the person that decides. He appoints people that will affect these change. And I think we have to see how far reaching these changes are. I think just having the ability for it to be a reserve will be a huge move already. And then we'll see what percentage will be.
And the sentiment report highlights that most altcoins are currently showing negative MVRV, which stands for market value to realized value returns. For those unfamiliar, MVRV is a metric used to assess whether a token is overvalued or undervalued relative to its realized value. So when MVRV is negative, it typically means that on average, investors are holding their tokens at a loss, which is a potential sign of undervaluation. So given this backdrop, do you think this negative MVRV territory presents a strong accumulation opportunity for long-term investors, or could there still be more downside risk in ahead? Like, what additional indicators or market conditions should investors consider before deciding to enter at these levels? Maybe Brian, would you like to take this one?
Yeah, so it's MVRV is a really valuable metric, and we love to use it in our analysis. But I would best frame it as a probability meter where, and sorry, my camera is a little blurry. I'll fix this after I finish my segment. But in short, MVRVs, the more negative it is, below 0%, that means that on average, traders are, if you take all of the wallets out there, they're at a loss based on the past 30 days, if you're looking at 30-day MVRV, or 365 days, if you're looking at 365. And in short, the 30-day MVRV is very negative, especially for altcoins right now, because you had a ton of top buyers that were coming in mid-December and got burned. And there was a lot of new retail buyers who were, hearing about crypto from a friend and jumping into all sorts of meme coins. So of course they're down significantly now. But I would warn that even though the 30-day MVRV is showing a lot of pain that you could potentially buy into and maybe profit for the short term, the long term, if you look at the past 365 days, even a lot of those meme coins and speculative assets out there show average profits for most assets still, because going back to early 2024, we were significantly lower, not just for Bitcoin, but almost all of crypto was significantly lower. So it's kind of a risk tolerance thing. If you want to buy in now, have an idea if you're on the short-term train or if you just want to hold for a long time, because the long term actually looks a little more dicey, even though there could be a short window, perhaps over the next 2, 4, 6 weeks, where you could potentially buy and then sell again if and when the 30-day MVRV goes way above 0, if that makes sense.
Mm-hmm. So would you say that investors should just be cautious, like in the long term, like they need to identify points of selling?
Yeah. So obviously always be cautious, but there are better, more opportunistic times than right now, where both like the short and long-term average returns are way below 0%. Now is not one of those times. Now we see short-term losses, but still many long-term gains. And people are kind of just showing a little impatience going like, can I buy yet? Can I buy yet? Well, mathematically, we're still showing that there could be some risk of more downside, barring, Trump opens up the floodgates and decides to make, crypto tax free in the US or something. And then all bets are off and that changes everything. So based on the knowledge we have now, there's some cautious optimism for the short term, but concern about the long term.
All right. Thanks, Brian and Shreya, for breaking down those trends. It's clear that while we're seeing some, short-term uncertainty, the long-term picture could still offer plenty of opportunities, depending on how Trump's policies and institutional interests play out. But like what Brian said, it's always good to exercise caution when you're investing. Don't invest more than what you can afford to lose. Right. Let's just take a quick look at the chat box to see some questions. So this one is from Bull Forever. So which region is showing the most crypto adoption right now based on data?
Okay, I guess I'll answer that first because what Bybit sees might not be the same as what Brian sees, because he sees a fuller picture across the board. And I'll break this down into, I guess, institutions and retail. So I think retail, we've seen a lot of new people come in that were not traditionally in crypto because of, I don't know if everyone's heard of the TON ecosystem. People who were using Telegram might not have been crypto experts in the past, but people who use Telegram, all of a sudden, you play some games or you get involved, and all of a sudden you get tokens, and then they're like, well, I got these tokens now, what am I supposed to do with them? So they go to the top crypto exchanges, which Bybit is one of. So we've seen a lot of the non-traditional regions where it used to trade cryptos are coming in, and that's across the board. So whoever uses, for example, Telegram, all of a sudden it's now an entry point for a lot of clients. So I would say it's not the same proportions as it used to be. I think for Bybit, we're stronger in Europe and Asia than any other region. I think we're trying to make an inroad into South America, which is not as strong as what we would like. But I think because of something like TON, it's actually helped quite a bit. And then for the institutional side, the institutional side is a little funky because a lot of them open, in jurisdictions where it's tax efficient. So it doesn't show the full picture of where the institutions actually are coming from. But what we see is that I think a lot of the institutions that were mainly focused on TradFi now all have a crypto arm and they want to get involved. And like I said earlier, this has not happened 2 years ago, but last year, a lot of the big new institutions, I can't mention names, but some of the largest hedge funds in Europe are now approaching us and say, we want to open an account, we want to be ready. And they're testing the pipes already. So I would say that, it's pretty interesting.
Thanks, Vignette. Brian, do you have like a different perspective based on like data on your end?
Yeah, would you mind clarifying the question a little bit for me? Are you asking specific projects showing more adoption or more so on the institutional versus retail side?
I think they're probably asking, hold on, let me check. I think maybe you can talk more about like retail versus institutional.
Yeah, okay. So I'll go ahead and share one other screen here that illustrates what I'll answer that with. I think this will be a good explanation. So we can break this down by total holders. And what we're looking at is the top 8-ish or so projects in terms of the amount of non-empty wallets on their network over time. This is the past 1 year of data. And we've got Bitcoin here in red, Ethereum's in yellow, Tether's in blue, XRP in orange, USD coin in pink, Cardano in bright green there, Doge in yellowish, and Link in beige. And for the most part, we see assets like Ethereum, Tether, USD coin, especially ERC20s and Ethereum-based assets, they're just continuing to see more and more adoption over time, regardless of what prices are doing. Now, Bitcoin is a lot more sensitive to where prices are going. And you can see they had a lot of growth between mid-July, when that bull run kind of started, all the way up until the prices sort of came to a halt right around here in early to mid-December. We've actually seen a decline. I know there's a lot of different lines here, but if I just check between late November versus now, the past 6 weeks or so, Bitcoin is actually the only one of these projects that has seen a drop in non-empty wallets. dropping about 127,000 total addresses that were holding coins that no longer hold coins now. So the net difference over the past 6 weeks is actually a negative for Bitcoin, but a positive for everything else. It still seems as though there's a lot of loading up for different altcoins, and it makes sense for stable coins. That means people are cashing out of Bitcoin and getting more Tether and USD coin wallets. That's
Mhm.
completely normal at the end of a bull cycle. But this is largely, as you would guess, representing what retail traders are doing, because it's much easier to make a $10 USD equivalent wallet versus a $10 million wallet. There's simply just way, way less of them. In fact, 93% of all Bitcoin wallets are under zero point 0.1 BTC, just to give some perspective. So I'm very interested to see how far this line can go down, because that would actually be a positive sign. You saw back in June, when you see these total holders moving down significantly, it often
Mhm.
can trigger a big bounce, because what it means is retail traders are capitulating right now. And that's sort of what's going on at the moment. We would just like to see more of that from altcoins as well.
Mm. Interesting. I'm sure everyone is hoping for the line to go down. Okay, we have another question. So, does that mean that 100K is almost the max price for Bitcoin since people are already cashing out? What do you guys think?
I don't think so. Just because 100K is a round number doesn't mean it has some sort of max ceiling to it. I think that's
Mhm.
a bit of a newbie perspective, and I don't mean to insult whoever asked that question, but uh, in reality, market caps can go to whatever uh, the crowd and whales collectively decide to push prices to. And the fact that we went to what 108K or so about 1 month ago was a testament to the fact that, resistance and support levels can only mean so much, because you're basing it all on the past. And
Mhm.
as soon as we break through a resistance level we've never seen before, everyone's like, oh, well, I guess we have to look at different indicators, because there's no history we can point to say that 110K is the new, you know, resistance we're going to bounce off of and then crash. And so, yeah, I think as long as some of these big institutionals and MicroStrategy and BlackRock and all these different corporations with tons and tons of dry powder continue pouring money in, there's no end. And
Mhm.
20 years from now, $1 million plus or $5 million plus Bitcoin is not out of the question.
Mhm. So, would you say that personally you're very bullish on Bitcoin?
I wouldn't be in the industry if I didn't believe we were going to continue to grow, for sure.
Of course. All right. Thanks for the questions, guys. Keep those questions coming. We'll answer them in the next segment. So I'm excited to share something very special right now that we've got coming up on Bybit. It's a campaign you won't want to miss, and it ties perfectly into today's topic of seizing opportunities in 2025. So, in celebration of the upcoming market rally many are anticipating with Trump's inauguration, Bybit is launching the Crypto Dawn campaign. So this is your chance to inaugurate your journey to one Bitcoin. All you need to do is deposit, trade, and collect crypto cards to unlock a massive 400,000 USDT prize pool, which includes one Bitcoin, a Tesla Model 3, and more. So this campaign runs from January 20th to February 7th. So mark your calendars and get ready to kick off the new year in style. More information on the campaign will come out very soon, so stay tuned. All right, with that exciting news shared, let's get back to our discussion on emerging crypto sectors and what lies ahead in 2025. So, with all the buzz around Trump's return, it's easy to focus just on Bitcoin and Ethereum. But beneath the surface, new sectors like AI tokens and real asset tokenization are quietly making waves. The big question now is which of these emerging sectors could drive the next big narrative in 2025? So, let's hear from our panelists. Let's start with AI tokens. So last year, AI tokens saw explosive growth with the market cap hitting 49 billion. Projects like Virtual's protocol grabbed headlines, and investors have been piling in, hoping to ride this next big wave. But as we know, rapid growth can sometimes signal a bubble. So, do you think that AI driven crypto projects are here to stay, or are we looking at something that could fade as hype dies down? Shunye, maybe you would like to go
Okay,
first.
so this is once again not financial advice. So I think this is mimicking the real world, the traditional world. And if you look at a lot of the AI stocks, like with Nvidia, with a lot of other companies are related to it, it's almost published, territory, and everyone's just trying to tag along for the ride and try to enjoy it. I do believe in the future of AI, just like I do in the future of blockchain. I think these two go hand in hand together, and I think the buzz right now, this feels like a lot of it, I would just say it feels more like a meme coin rally than a true AI rally. Everyone's just sort of attacking themselves with AI. And I think we're waiting for things to shake out. It might not happen for a while. Maybe in 6 months or a year, you do see some people who are actually adding value to blockchain and AI and listing their relative tokens. And maybe, from that pile, only 3 or 5 actually will survive and will prove to add value. But right now, I would say be cautious.
Mm. Like you said, a lot of skeptics are arguing that many of these AI tokens, AI agent tokens, are overhyped or lack clear utility, and they call them glorified meme coins. So, how do you guys differentiate between genuinely innovative AI-driven projects and those that might simply be capitalizing on this trend? So, what are some things that you look out for?
Well, the number one thing is probably their actual development activity, which we can see. It's public information on their GitHub, and obviously Sentiment organizes that into meaningful data you can read about and kind of keep tabs on very efficiently. I'm
Mhm,
looking at some of the top AI projects right now, just in terms of market cap: Hedera, Near, Internet Computer, Render, just to name the first four, mathematically in terms of their overall market cap. And I know about all four of those projects, and I've even talked to some of their team members. They're all very friendly people. I'm not going to suggest that they're all sitting on giant piles of gold that are ready to burst, but what I can say is their work is showing evidence of real productivity and real uh, effort to improve and innovate not just their own projects, but the cryptocurrency technology and what it's capable of for the future. And it's kind of a microcosm of what I think AI is and where it's sitting right now. Um,
mhm,
this goes a little outside of crypto, but I do think a lot of people are kind of in love with the idea of AI and what it's capable of more so than what it's offering in terms of real value right now.
mhm,
Um, and that kind of reminds me a little bit of the dot com boom from 99 through 2001 or so. I don't think it was just in the US. I think this was a global phenomenon where everyone was just scooping up every single .net or .com um, URL out there with the hopes that it would turn into something huge because the internet was so new and fresh and it could do all of these great things. And then slowly but surely we saw, certain websites really flourish and turn into a feasible product, and others
mhm,
faded into the distance. And I think over time, that's what's going to happen with AI. We're going to see the cream rise to the top more and more. And even though we don't know every single one of these GitHub submissions and what they're actually working on, we can tell by the hundreds of daily uh, GitHub updates that are coming in to our
mhm,
platform that at the very least these teams really care and they're trying something new to keep up with uh, blockchain technology and the ability to tokenize uh, their AI offerings. So I think it has a future, but it's one of those sectors where I'd really advise that you read up on every project out there that you're interested in investing in, because there's a lot of speculation involved in it. It's kind of like meme coins, except they're actually um, offering something technological behind it. So that's the difference between AI and meme coins, in my opinion.
Mm. And there's actually been growing chatter about AI-powered trading bots entering the crypto market, potentially creating an uneven playing field for retail traders. Do you see this as a legitimate concern or just another market evolution?
You feel free to
I'll
go
take this
first.
one first. Yeah. So I've been a trader for most of my life. And anytime there's a tech innovation, all that it does is actually evens the playing field. And I'm going to be honest here is that, if you look at back in the old days, traders used to do math in their head. Then you had Excel. Then you had complicated computer models. So all that's done is, a lot of these models, at least AI agents, are just making it easier for retail to access them. But does that mean you're going to make more money? I think that what happens is that if you don't use these tools, you're going to be disadvantaged. So what happens is that everyone in their, who wants to trade needs to learn how the tools work and how they work with them. And if you don't work, you're going to be left behind. But it actually doesn't give you an edge. So it's sort of like, if you want to learn things nowadays, you have to learn how to use ChatGPT, and you'll learn how to use the web. If you don't know how to use the web, you can't survive. So it actually, my only recommendation is that it doesn't disadvantage anyone. You do have to understand what the new tools are and how to use them, or else you're going to be left behind. So if you're a new trader and you don't know how to use any tools, then you're going to be left behind. So take the time. Bybit Learn will probably have lots of, discussions about how to use these various tools. Some of these tools are for recommendations. Some of these tools are actually quite useful. I think as we get more and more, it's to lessen market impact, to get into positions or to build positions that you might not have thought of before. So in that respect, it is quite helpful.
Yeah, it's definitely to use it to complement your trading strategies, right? Not
Yeah,
see it as competition, right?
exactly.
Brian,
And I was just going to say, trading bots have been around for a long time. Shout out to 3 Commas, who I've talked to their team before. They're really nice guys. AI is basically taking the concept of trading bots to another level and trying to automate the strategy of automating. As weird as that sounds, we're basically trying to further automate what was already something that was designed to allow you to trade without having to be there. So, as Jeanette was saying, it's kind of like you can either embrace it and keep up with the efficient trading that they're now outputting, or you can kind of fall in love with your current strategy and say, I trust what I'm doing, even though I'm probably giving up a little bit of efficiency and speed in the process. It's like, you can drive a car from the 1950s, but you're not going to get that 50, 60 miles per gallon. You're not going to get satellite radio, and you have to be okay with that. And I think that's kind of the difference between traders who are still in love with their old school mentalities and the traders who are just embracing what tech is currently out there.
Thanks, Brian. That's a very good analogy. Right. Real-world asset tokenization hasn't grabbed as many headlines as AI tokens or meme coins, but it's definitely quietly gaining traction. Platforms that enable the tokenization of assets like real estate and equities have seen increased interest over the past year. Some believe that real-world assets could lead to the next big crypto narrative. What's your take on this? Do you think that real-world assets could follow the path of DeFi and NFTs in becoming a major sector? Shunyet, would you like to?
I'll go first. So actually, it's already taking off, but it's taking off in a less exciting area. And I'll give an example of it's actually happened both directions. Where in the crypto side, we have ETFs. If you look at ETFs, it's almost like they're taking a crypto asset and regular traditional people who have one access point could access it. So what's really succeeded in RWA right now, and we see more and more of our top institutional clients push for this. One of the reasons is yield. The tokenization of T-bills is huge. Right now, there's no clear leader, but if you look at BlackRock, if we look at and I think the headline news is mostly BlackRock with their, Bill Lee. I can't even pronounce it properly, but a lot of these, where you have T-bills that are backed and they're interest-bearing stable coins. So I wouldn't call them stable coins, but interest-bearing tokens that could use as collateral and trade everywhere, or to swap back and forth. And I think a lot of people who want to engage with crypto exchanges want to get the interest. And so we're getting a huge push from all of our institutional clients to say, please accept this. Now, the problem is that there's no clear winner. If you look at, at stable coins, there's two dominant players, right? It's Tether and USDC. And I think this is slowly starting to play out. And this is the first use case, right? T-bills seem very interesting. I still haven't seen something else that's more innovative that has gained traction with RWA. I mean, I think you mentioned real estate. Maybe one of the simpler ones could be something mimicking a REIT, but we just haven't seen anyone become big enough. But bonds are taking off. I think, as we go from T-bills, maybe we could go longer dated bonds with higher duration. So I think this is the next simple evolution. But, I'll be excited if there's something really different that comes out with RWA.
Thanks, Vidyet. Brian?
Yeah, so admittedly, I'm less of an expert on RWAs. This is one of my sectors that I want to study a lot more in 2025. And I thought instead of answering myself, I could ask Chun Yet a follow-up question if he doesn't mind. I'm curious, since it's so closely related to T-bills and bonds, and there's a lot of reliance on those. If there was, say, a market crash similar to what we saw in 2022, do you think that this would actually be kind of beneficial to the sector, and perhaps we could see RWAs have kind of a better holding up trend to them because of their correlation with bonds and T-bills that would then get increased interest?
Yeah, so I think a safety net assets, most of right now stable coins and a lot of what's being tokenized in RWA are T-bills, right? Yep. And I think there's a narrative right now that interest rates, even though the U.S. is cutting interest rates are not getting cut. Right. So I think it's interesting for crypto people to have easy access, and this is around the world, to have access to US T-bills. If I'm a person sitting in Singapore and I want to buy T-bills, that's a pain in the ass. But right now, as this adaptation comes out and there's high yield, this is actually really good. And instead of back in the old days, if there's a crypto crash, what do you hold? Usually you hold stable coins. But right now there's another asset you can hold that pays interest. And we also seen other tokens with innovation where people are sort of putting funding fee strategies and tokenizing that. So like I said, no financial advice, and I'm not trying to, there's something like USDE, which is, sort of a token that has the funding fee element to it that you could hold. So if you are waiting out in the sidelines instead of just holding, Tether and USDE and making the yield on it, now you could hold other assets. And especially one with like US T-bills, huge market, very highly liquid.
Yeah, that's fascinating. Appreciate that answer.
Thanks, Chun Yet. All right, we spent a lot of time today talking about opportunities, but we also can't ignore the risks. So, whale activity has slowed down, which might indicate caution ahead of major events like the inauguration. But could this low activity lead to sudden volatility, especially if we see unexpected regulatory announcements? And if so, what are some of the tips that you would give to investors navigating this? Navigating this.
Yeah, with less whale activity, the markets become a little more fragile and prone to some bigger moves from smaller players as a result. With less dominance from the key stakeholders, that means every $100 wallet has a little more pull in terms of where they can swing markets. I would say that if retail actually started to grab control, and whales didn't like the direction retail was taking it, they could easily just jump right back in. So I wouldn't say that this low activity era is something that's going to be a mainstay until Trump is elected, or inaugurated. If we see the 100K barrier get broken in the next few days, for Bitcoin before the inauguration, that could change the trajectory a little bit. There's a lot of psychological reactions that very easily can sway things. I guess my advice would be watch for mood swings in the crowd. Um, Sentiment does a really good job of quantifying like millions and millions of comments into, you know, these are bullish and these are bearish, rather than just relying on, the 15 or 20 comments you see at the top of your timeline when you happen to be scrolling on X. And I think some people make that mistake and they're like, hey, Santiment, you say that the crowd is bearish right now, but I just saw 10 people say you should buy. And trust me, you want the largest sample sizes possible. And just like we talked about with tech being where it is now, rely on the big algorithms to do the work for you rather than using a tiny sample size of what you had 5 minutes to read. And I think if you start to see them swaying very bearish, that's a great time to buy, just like we saw less than 24 hours ago when we dipped below 90K. And what do you know? Now we're flirting with 95 again. So at the same time, if they start getting euphoric and they're like, here comes Trump, today's the day, I'm going to buy all the Bitcoin I can with my remaining piggy bank money, that's where you want to start to pull back and realize the crowd's getting a little too excited about an event we already knew was going to happen since early November.
Thanks, Brian. So as we enter 2025, investors are flooded with a lot of opportunities across new projects, but there's also a lot of speculation. So Shunyet, what are some of the biggest red flags or warning signs you think people should be keeping an eye out for when evaluating these projects?
Okay, that's a complicated one. I think, it depends on what kind of trader you are. If you're a holder, or you're a speculator, right? If you are a holder, I think you other than Bitcoin, you sort of want to see if this thing brings value to the ecosystem and how it will bring value long term. So that has always been the same. This is similar to what TradFi is. And I think the other one is that if you are very good at gauging where overall sentiment or the community is headed, then that's another way to sort of get involved. And if you do that right, then and a lot of the meme coins is like, okay, which one has the most user base, which one is building the right sentiment, and that sort of leads the direction there. So that would be the.
Thanks, Shunyet. All right. Thanks for highlighting those risks, guys, and also for sharing some tips. Once again, not financial advice, just for educational purposes. So we've covered a lot today, and we'll just quickly take a look at two questions from the audience before we end off today's live stream. So maybe this one's for you, Brian. Do you think Elon Musk playing around with crypto, making random coins pump, is it good or bad for the industry?
Yeah, that's an interesting question. I think most people answer that based on whether they like or dislike Elon Musk, and I don't blame them. I don't. I personally have very mixed reactions to Musk myself, and obviously he is. It's coincidental because he's constantly pushing meme coins, but he's also the richest man on the planet. So he's a whale who can have a lot of sway himself, yet he's choosing to dabble in the coins that almost exclusively retail traders are the ones interested in. So he knows what he's doing with every single post. I guarantee you that. Sometimes if you follow along with his agenda, you can benefit if you know what his agenda is, but very few people know what Elon Musk's true wishes are. He he mostly kind of speaks from the heart, it seems, but I also know that he has a lot of plans in mind, like the Kekius Maximus avatar change, right? So I think overall it is a good thing that the richest person on the planet has taken such an interest in crypto, because it
Mhm.
has brought in a lot of people into crypto that are willing to um, dabble in different assets and lose money so others can gain money. Let's put it that way. At the end of the day, this is a zero sum game. And when
Mm,
new retail traders are being brought in by one of the 5 most prominent people on the planet,
mhm.
uh, I think exponentially that's a good thing, as long as people are not seriously getting hurt by some of his moves. And I do think that that's happened to an extent. So that's my complicated answer.
Yeah, definitely. Thanks, Brian. And this question is for you, Shunyet. Is Bybit exploring to incorporate any T-bills products?
I think Bybit as a whole decides to partner with whoever's offering a product like this instead of doing it ourselves. I think,
Mm,
if you look at one of our other uh, large competitors, they like to do everything in-house. I think Bybit likes to partner with everyone that's out there. And which ones will succeed, we don't know. I think Bybit wants to be the crypto arc. We don't want to be monopolizing your way to access the crypto universe.
mhm.
So the answer is probably no, but we'll partner with all the significant ones so that any one of our users, whether it be retail or institution, can get access.
Thanks, Shunyet. And that wraps up our live stream. A special thank you to Brian and Shunyet for sharing their invaluable experiences and knowledge. We've covered everything from the potential impact of Trump's inauguration on the market to emerging sectors like AI and RWAs, and discussed some key risks to watch out for in 2025. Of course, once again, please note that none of this is meant to be financial advice, and the topics discussed are purely for educational purposes. Thank you to our panelists once again, and to you, our audience, for tuning in to today's Trump's inauguration live stream. For more information, please visit our Bybit Learn website, and don't forget to connect with all of us on social media. We also have some exciting new projects that are coming up on Bybit, including the Crypto Dawn campaign launching very soon on January 20th. So just keep a lookout. Let us know what are some topics that you would like to hear more of, and we'll see you at our next live stream. Stay tuned to our social media platforms for more updates. Thank you, and see you next time. Bye bye.
Thanks, everybody.
Thank
Thank you.
you.